Stephen A. Cohen is one of the best-known hedge fund managers on Wall Street, and his SAC capital, with approximately $9 billion under management, is one of the most successful fund firms of them all. But all that could change. The Securities and Exchange Commission today announced that it has filed a civil complaint against Cohen for failing to properly supervise two of his trader employees. They are separately accused in a massive insider trading scheme. Now, the SEC is also looking to bar Cohen from managing other people's money. In a statement, SAC Capital said Cohen's done nothing wrong and will fight the charges vigorously. So why now? Why civil charges? And do today's SEC moves foreshadow criminal charges to come? Ron Insana is with us. He's a journalist who once worked with Cohen. Ron, good as always to see you.
Thank you, Steve.
Why is there so much attention that surrounds Stephen Cohen?
Well, certainly by any measure, he is one of the most successful hedge fund managers in the history of the industry. Like George Soros or others, he's returned about over 25% a year since he started his fund back in 1992. Started with $25 million. He himself is said to be worth $9 billion. And at its peak, SAC was managing $15 or $16 billion. So quite a big success story. And he's also known for some of the accoutrements that have gone with that success, I should say. A large house.
Or excess.
Or excess, depending on your point of view. A large house in Greenwich, Connecticut, a huge art collection, a lot of real estate. And so in some ways, I think probably the government, maybe others, identify him as the poster boy or poster child, I should say, for the hedge fund industry.
What about the civil charges? They are easier generally to prove. Is that why you think the SEC took this particular move?
Well, so what's fascinating to me is that, we've gone from reading in the papers that there was going to be a racketeering a set of racketeering charges leveled at Steve Cohen. And then it was, maybe that's not going to happen. So the SEC will sue. The SEC didn't sue. This is an administrative proceeding. And so of all the possible charges, for lack of a better description, they could have brought against Steve Cohen, this is the least among them. Mm-hmm. Now, they do want to bar him from managing from other people's money, which would change the financial structure of SAC. As a hedge fund, it would cease to operate, but it would still be his own family office at the end of the day with $9 billion or so to manage. But it's a big deal in one sense, but in some ways probably prevents or probably foreshadows the fact that there will be no criminal charges filed against him.
That's what a lot of people think.
Yeah.
You know, one of the reasons individuals care about this case is that there are a lot of pension funds and endowments that have some money with SAC capital. Let's say that these charges go away. He is never really doesn't go down for it, and that the insider trading cases against two of his former employees, that those do not result in convictions. Yeah. Can he survive as a manager of other people's money?
Oh, yeah, sure. I mean, listen, he's got $9 billion of his own money, which is the lion's share of what they manage anyway. So he's going to be up and running for a period of time while they fight this. He's not closed. People have withdrawn a rather serious amount of money from him during all the allegations that were made in the press, even before this administrative proceeding has been brought. But let's say on, the two insider trading cases that are currently outstanding and don't go to trial till later this year, if those two individuals were found not guilty, the SEC would have very little basis for admonishing Mr. Cohen. And I think now what will be interesting is, does he let people back in who abandoned him during this period, or does he take on new investors and stay with those who stuck with him during the same period?
Ron Insana, thank you very much. Always good to see you.